If you are serious about growing your tax-free savings account, then ETFs are one of the most important things that you must have within your tax-free savings account in order to grow it well over 10% and sometimes even over 15%. But just having ETFs within your tax-free savings account doesn't guarantee you growth if you don't understand what an ETF is, how to choose an ETF, and how to structure your portfolio in such a way that it is diversified, it grows well, and it can sustain you throughout all these markets that are unpredictable. Hi, my name is Sphiwe. I am the author of You Don't Know What You Don't Know, the complete guide to building your tax-free savings account, which is an ebook that was launched in June. And since then, I have sold over 100 copies and I have a 4.8 star review on the ebook on my website. And most of you may know me from TikTok, where I have over 25,000 followers. And I have started this channel to help educate people in long form content about tax-free savings accounts. So if you are new here, please like, subscribe, and leave a comment if you have any questions, and I will guide you through everything that you need to know about a tax-free savings account. If you don't know or don't understand what a tax-free savings account is, I made a video here. You can just watch that before you watch this one. It will explain everything that you need to know about a tax-free savings account, the lifetime limits, the annual limits, what is allowed and what is not allowed. So please watch that video and then it'll help you with everything. So right now we're going to be doing a deep dive into what ETFs are. An ETF is an acronym that stands for Exchange Traded Funds or Exchange Tradable Funds. How I always explain ETFs to beginners is that think of ETFs like a choice assorted biscuit box. So within that choice assorted biscuit box, you get about 7 different flavors of biscuits. Those can include like toppers, lemon cream, strawberry wafers, and many others that you already know. So if you are buying an ETF, you are getting exposure to different industries, to different companies, and sometimes even different countries compared to when you are buying just an individual share. So in this analogy that I'm making, an individual share would be your Eat Some More's. If you're buying Eat Some More's, that's an individual share. Think about this as shares of maybe Capitec. If you're buying that, then you're only getting the Eat Some More's and nothing else. But if you're buying a choice assorted box, you're getting Eat Some More's, toppers, and so forth. So an example I will make is with the JSE Top 40. So if you are investing within the JSE Top 40, which is an ETF, then you're getting exposure to companies such as Capitec, Standard Bank, ShopRite, mining companies, some insurance companies, some retail companies. So it's diversified. So that is what an ETF is. When you're buying one ETF, you're getting exposure. ETFs such as the JSE Top 40, they expose you to 40 of the largest companies in the Johannesburg Stock Exchange. That's why they call it the JSE Top 40. So you're getting various companies. You are invested within companies such as your Clicks, your Absa, your Sanlam, your retail companies that it would take me a very long time to break down. So that's what an ETF is. And there are many different ETFs. Some give you exposure to the local South African market, which is the JSE Top 40. And then some give you exposure to international markets, such as the MSCI World Index. So the MSCI World Index or MSCI World ETF tracks about over 1,000 companies in about 23 different markets. I'll explain what tracking means, but I just wanted to give you an idea of what an ETF is. All ETFs have providers who track the ETF and ensure that they're tracking the correct things. So ETF providers include the Satrix, One Invest, Prescient, FNB, and many other providers. So what is the difference between these providers? So some of them might not track it as exact as the other ones, and then some of them might even have high fees. But before we get to that, it is important to note that you can still buy the same ETF from different providers, but it's not something that I ever recommend, because that is something called ETF overlap. So if you subscribe to this YouTube channel, I'll go in depth into ETF overlap, and you can let me know in the comments if you understand what ETF overlap is, or if you want me to touch on that. But while still on this issue of ETFs and tracking, the Johannesburg Stock Exchange, for example, with the JSE Top 40, will have a mandate and say that these are the 40 largest companies by market cap on the Johannesburg Stock Exchange, and we want you, they said that, saying this to their ETF providers, we want you to track these 40 companies. And within these 40 companies, they are not equal, right? They don't get an equal split. So there's a top 10 in every ETF. So if you look at the JSE Top 40's top 10, you'll see companies such as MTN, Standard Bank, Capitec, Naspers, Goldfields, Anglo Gold, and so forth. And each of these companies has a weighting. For example, Naspers might be weighted at 6%, and then MTN might be weighted at 5%, and Absa might be weighted at 2%, and other companies maybe 1% or 0.5% or even less, right? So every other month or every few months, the ETF providers need to rebalance their tracking, because sometimes Naspers might grow better than MTN, right? So if its share price grows by a lot, then it needs to be rebalanced. Maybe they're no longer putting 5% of the JSE Top 40 in Naspers, but they need to put 7%. And that's what companies such as Satrix and One Invest do. They rebalance, which is tracking. They rebalance every few months or if need be. Because the JSE Top 40 is being tracked, there are obviously going to be errors. Sometimes there's a tracking error. So sometimes it might not be perfect, because sometimes the companies might grow faster than expected, and the JSE needs to rebalance these tracking, and then they need to let the providers know that we have changed our rules, so this is how much you need to allocate to these ETFs. And because they are also human, they might make some mistakes sometimes. So there are tracking errors that sometimes happen, but there has to be a small margin of error, which is why in every ETF, you see that there is what the fund is supposed to track and this actual results. So there's always going to be a difference. If the fund was supposed to return 10%, maybe it returned 9%, and that is because of tracking error, number one. And number two is going to be because of market movements. Because the JSE Top 40, when the JSE is being drawn, Satrix or One Invest will do the actual trading. They need to pay investment costs in order to put your money in there and stuff. So the investment costs have to be taken into consideration. Issues such as spread, because sometimes the price that you see on the market might not be the price that you buy, because the market moves very quickly. So there is a small margin of error, and it is to be expected. Now, I'm going to show you exactly how to find and vet an ETF. I'm going to show you exactly what you need to look out for, and what should be important to you and what shouldn't be important. An ETF, once you're on Google, you will search for the ETF that you want. So for this example, I'm going to be using the JSE Top 40. So you're just going to search JSE Top 40. And then you're going to look at the different results. You see here it's a provider. It's provided by Satrix. And then as you scroll down, you might see other providers. So you can search it with the provider, and then you can say Satrix JSE Top 40, it will appear. You can say One Invest JSE Top 40, it will also appear, right? So I'm going to be making an example with the Satrix Top 40. So once you've found this link to the Satrix Top 40, what you want to do is to click on this, and then, okay, it's giving me an error, but I'll just go to the other link. Okay, so now we are on the Satrix Top 40 page. So here, you'll see all this information here. You don't really need to know all this information because it's in the MDD. So MDD stands for Minimum Disclosure Document or the fund fact sheet. If you want to know every company that is tracked by the JSE Top 40, you can click here to view constituents. So here you'll see all these companies that are tracked, and then you can even download this. But because we want to look at the fund fact sheets, you're going to click on download MDD, and then it's going to be downloaded. So this is all the information that you need to know. And then the first thing that you should read is the investment objective. So here it will tell you that the mandate of the Satrix Top 40 is to track as closely as possible the value of the Top 40 index. And Satrix 40 is a index tracking fund registered as a collective investment scheme and is also listed on the JSE, right? So another thing after reading this that you want to look at is the fund information. When was this ETF started? So this has been running for 26 years now because it started on 27 November 2000. And then after that, what you want to know is the distribution frequency. This will tell you how often do they give out dividends. So dividends by the JSE Top 40 are given quarterly, and then how much are the dividends? So the dividends is 4.03%. This is per year, and then they are divided by 4 so that they are given quarterly. And then the rebalancing that I was talking about for the JSE Top 40, it's done quarterly. So every 3 months they will rebalance. So that probably means that this ETF you'll probably get it every 3 months. Right. And then there's something called Scrip lending. So the Scrip lending ratio is 0.04%. In my ebook, I actually touch on Scrip lending a bit. So if you are interested in getting my ebook, you can just use the link in my bio. But there is somewhere where I talk about Scrip lending and I explain what Scrip lending is. But I can make another video just explaining Scrip lending in detail. You let me know if you guys are interested in that. And then the value of this portfolio. This is important because if this portfolio is big enough to be over 21 billion, that means this portfolio is very secure compared to other portfolios that may be smaller in value. And then what you need to also look at is the fee details. So the annual management fee per year and for every 3 years, the total expense ratio, the transaction costs, as well as the total investment charges. Right. And then here they do a bit of explaining. And then if you scroll down, there should be somewhere where they explain what each thing mean. Okay, this one doesn't particularly have that. But once you've read the fee details and you understand them, that, okay, the total investment charge per year is 0.1%, you know that's a very low cost, which is why I love Satrix ETFs. And then the other thing that you look at is fund performance. You look at fund performance the past year, 3 years, 5 years, and 10 years. Sometimes it will say since inception, but for this one, it says 10 years. So for this one, you can see that the fund in the past year returned 18.37%, and then the benchmark was 18.59. So this was what their target was, right? So they're a bit under target. And then in the past 3 years, they returned 16.62%, and their target was 16.87. In the past 10 years, they have averaged an average of 11.72%, and the target was 11.96%. So you can see that the difference between the benchmark and the fund is very low, which means that this ETF or this fund is properly managed. And then one of the most important part is this section, the highest and lowest return. So here you see that the highest annual rolling return for the JSE Top 40 is 25.2%. So this was a very great year, which returned 25.2%. And then the lowest annual rolling return is minus 0.8%. So when you see these brackets, that is a minus. So you should treat that like as a negative. So the lowest it has went so far, or the lowest it has returned, is minus 0.8%. Right, which is not bad at all, because some ETFs have delivered a lowest of minus 44%. So After that, you look at the income distributions that because I told you about the distribution frequency, which is quarterly. In the past cycle, they did September 2025, December 2025, March 2026, and then June 2026. So that means the next distribution frequency or the dividends are going to be in the next 3 months. And then after that, you look at the risk profile. The risk profile says that this is aggressive. So you need to know what type of investor are you. I can touch on this in another video. Please let me know in the comment section if this is something that you'd like me to touch on. And then explains that this is an aggressively managed high-risk portfolio that aims to deliver capital growth over the long term. So if you are not an aggressive investor, you shouldn't be investing in this ETF. And then after that, you look at the portfolio allocation as of 30 June 2026. So banks make up 23.57% of this, and then life insurance 4.95%, and then personal care, drug and grocery store 4.84%, and then personal goods, beverages, investment banking and brokerage services, chemicals, industrial metals and mining, general industrials, and non-life insurance. So this is the total portfolio allocation, right? And then another thing that you want to look at is the top 10 holdings as of June 2026. So you can see that Naspers, Goldfields, First Rand, Anglo Gold, Standard Bank, Capitec, MTN Group, Valterra, Alpha, and Absa, they make up the top 10 of this portfolio, right? So this is everything that you need to know in high level regarding a ETF and reading a fund fact sheet. So there it is. I've shown you how to find and read a fund fact sheet or a minimum disclosure document. So now that you know that, the next video I'm going to be making, it will be on the risk profile. How do you know which risk profile do you fit into and how to invest according to your risk profile? All this information that I'm talking about is available in my ebook that I mentioned at the beginning, which is You Don't Know What You Don't Know, the complete guide to building your tax-free savings account portfolio in South Africa. So if you are interested, the link for the ebook is in the description. It's only 199 rands, and you can get it. When you buy it, you'll get it immediately delivered to your emails, and then you can read everything that you need to know about a tax-free savings account. But if you cannot afford that ebook, then subscribe to my channel so that I can keep dropping these gems for you so that you can know exactly what you need to know and avoid making minor mistakes. Thank you.